of some brief, 1 to 2 year periods of down, but the general trend's up. Look at all the bad shit that happened along the way. All this is bad news events: bankruptcy, presidential election, Fed rate hike, Syrian tensions, QE plans. Like, there's all these events, right? Now, not all of these are negative, but you can see there's a lot of negative events here. And, debt fears. None of it really mattered because the general trend is up, because they're always increasing the supply of the denominator. So even if stocks are not necessarily more valuable, the denominator is being less valuable, so it goes up like this, right? The price of the stock indexes can go up like this forever, and the actual value can remain flat. As long as they're printing money, that denomination is going to go up, right? Now, let's talk about the denominator. So people will continue to be right on macro, but very wrong on asset prices because they don't understand the supply and demand equations. They understand the supply and demand equations, but they don't factor that the denominator in which they calculate outputs is debasing. $1 today on a chart is different to $1 on the chart 5 years ago. And let me show you the difference between the S&P 500 against the US dollar versus the S&P 500 against the supply of money in M2. This is not necessarily the best reflection or the total reflection of money, but it gives you a good idea. So you can see that since 2016, price has been within this range, right? It's been sideways. Whenever we have a crash, it's just going back to that same sort of low area. Against the US dollar, because the US dollar is being debased, right? You can see here that the price is going up to new all-time highs, right? Real value, flat. Inflated value, up, right? Why is this occurring? Well, there's more US dollars in the supply, and thus, because there's more US dollars, people are willing to spend more to buy stocks because they got more money, right? Money supply increases, people have more money to spend, they spend more money, the denominator is worth less, the things they put money into have the same amount of supply, price is going up, okay? So people will become macro bears, and what they end up doing is they go, okay, so in 2017, price was here, so I think that we could easily crash down to 2017, which is only really a 50% decline from the top, and markets have done 50% declines before. It's definitely going to happen. What they don't understand is that this dollar is only worth 60 cents here. So if price was to go down to this level with 60% more dollars, it's actually not just a 4,700 to 3,000 decline. It's probably 60% more. So it's probably more like way down further, right? So you think it's only crashing this much, but it's actually crashing this much if it hits your target on this chart, right? So what's more likely to happen is price has its, dump of 1 year, and then the printing presses turn on, and then the bottom's put in, and you just have to buy that panic, okay? And so that's just to understand, I guess, why you shouldn't become a macro bear. So let's summarize this with telling you how you use macro data to sort of navigate the price action and market cycles of crypto. Again, the main 2 points, risk and liquidity. Your goal as an investor is to buy when the risk sentiment is very, very off, when liquidity is declining, and your goal is to sell when the risk on sentiment is very, very strong and the liquidity is climbing rapidly. Okay, that's the goal. Buy the fear, sell the greed. And you can recognize fear and greed, what it looks like, using these 6 main data points. What does fear look like? It's a declining interest rate. What does greed look like? It's an increasing interest rate. What does fear look like? Increasing balance sheet. What does greed look like? Decreasing balance sheet. All right, Fed speak. What does fear look like? Increasing M2 money supply. What does greed look like? Decreasing M2 money supply. You can see here, same thing. Okay, what does fear look like? Well, they basically print money, which causes inflation. What does greed look like? Well, the market's going ballistic, inflation's high, they start pulling back, right? So that's just to explain to you how to use macro data, these main 6 data points, in order to understand crypto's price action, right? Crypto is driven by liquidity. This photo here is the single most important tool. Buy here, sell here. Buy when it's risk off, sell when it's risk on. That's how you make money in crypto. I'll see you in the next video.